Hello friends, how are you? Good week? This is Vladimir and this is the weekly review for 10th of January 2013. For a while now I've been talking about the euros, and when I say for a while I mean for 4 weeks I've been talking about the euros, and I say it's completely overbought and overvalued, not just overbought, it's overvalued. I was thinking about well, some intervention maybe from the central bank, some interest rate cut or anything like that. But in our world, and in 2013, when, as I said at the beginning of the year, this is the world war of currencies. That's exactly what it is. And in this world, all Draghi has to do as a central bank CEO is just holding a press conference and just say that euro still growing slow. He expected to grow better in 2013. He believes that what the actions that they already did will be enough, and that's all. The traders did not think it's good enough. The traders did not get it as serious enough from him, and the euro dropped down. I've been talking about that. Remember my levels, 135, 137? As I said then, I believe we are in front of a bearish correction. I've been talking about 134, then 133, breaking below 132, 40, 80 range should lead us for a move to 127. I will remind everything today, of course, but that's exactly how it worked. 137 was spiked, and now at the end of this week we are below 134. Same everywhere, of course. The euro pound, which I've been talking about this pair for a while. Anyway, I'll keep talking about that, of course, today, and other pairs of the euro, of course. If you follow my blog, I also call the top for the euro Canadian, 136.50. Well, it spiked it. You see it here? That's the one, 135.60. It spiked it a bit higher and dropped all the way down again for something like 350 points. What do I think about that and how it's going to act? I will talk about everything today. So just quick and fast reminder about what was expected and what actually happened. Same about the yen pairs. I was talking about that, and I will be talking about that, of course, again and again and again, because we are here for a long time. So if I annoy you with the yen pairs, I beg your pardon. I just think it will take several months actually of all this cycle to happen as we deal with daily and weekly chart. So I'm going to talk about that and update it as long as it develops. The euro yen started the correction since the 127. Pound yen is still playing around the top, and we will talk about that. Aussie yen is still playing around the top, 96, bit down, bit up. Swiss yen dropped down since its previous resistance around 350, 104. And well, let's begin to see what's for this week. So I will start with the euro pairs. Euro dollar and actually euro pound. This is my two favorite. These are my two favorites. Euro dollar has its weekly divergence. Now, as I said, 132.40, 132.80. This is a perfect range, which I call the bank range. Many orders from banks to buy there, buy strong. Many of them still believe the euro can go up all the way to 140 or even 142. Could that? Of course. And this is a big but. I will not be surprised at all if the euro dollar will drop down to 130, maybe 127 again. Now let's analyze what we have. We have this engulfing. This is perfect engulfing. This could be the beginning of a move down. As I said, we have the 133, 132.80, and 132.40 as the lowest level to go. If it breaks down, it should take us to the weekly 20 EMA. Now we go for the daily chart, and on daily chart, this is a perfect trend line. Well, actually, that's something that reminds the channel. A break below that could open the doors for further down move all the way for this channel duplication and all the way back to around 128, 127. Why? Because that's where the 200 moving average is, and that's exactly where was the previous important low. In other words, pay attention for this channel. Break below that, opens the doors. Now, what happens if it goes and stop here? That's a bank level, as I said not once. That could be also a perfect stop for the euro dollar. Imagine it stops here. What it will create here? It's going to be a bullish hidden divergence. Right now it's a potential because there is no new low on a MACD histogram. There is no new low on stochastic. It's only on potential. If it makes a stop here, it's only like 80-100 points below and create this bullish hidden divergence, then we will go for the 4-hour chart and we will be watching for, guess what? Correct, we will be watching for bullish continuing or regular divergence. As we can see now, it's going to be continuing. It cannot be regular anymore. So if it pushes it a bit lower, push, and the divergence here keeps forming, that could be a perfect buy opportunity. Right from here, maybe we will see the euro retracing all the way up again for the level that many banks are waiting for, the 140 or maybe even 142. Who knows? So from in other words, to make long story short, as long as the euro dollar will hold above the 132.40, or I would even say 132, because it might spike the 132.40 and retrace inside in. As long as it holds that on the daily chart, this beautiful trend line, beautiful channel, the euro dollar still has a bullish pressure. If it makes the breakdown, this is going to be a drop down potentially all the way to the 120. 130 is the first psychological level here, right? Here, right? 130 as a psychological level, and below that 128, 127 range. What could happen if the wick starts positive? As we have the divergence already, if the wick starts positive right here and push it up, right? It could happen. Then, I will do the simple actually. I think then we need to pay attention for the 4-hour channel developing, like here, and break above the channel up would provide us opportunities to join. Oh, that's how I see the euro dollar. The first part of my scenario was correct. 135, 137, in this range, the euro dollar has to make a stop and retrace. First part was correct. Now let's see if which of the scenarios I have, because I don't have clear scenario right now. I have several scenarios which I plan to follow, of course, and to act based on them. And let's see how it's going to work. Euro pound did a beautiful job as well, created a beautiful pattern. As I said, I believe on this pair very much mainly because it creates a weekly channel, a daily divergence and daily 20 candles right, and even monthly potential bearish hidden divergence. Now there is one thing to pay attention to. This is a monthly chart. As for now, it looks like a perfect inverted hammer. And that's exactly the reason why I will tell you now, be careful. Because if at the beginning of the month or in the middle of the month something looks like it's going to be a pattern, that's exactly where we need to be careful. And let's go lower now. This is a weekly engulfing. Could it push lower? Yes. Clearly, yes. But I will say two things. First thing, I will not be surprised if for the next 2.5 weeks left, it will play small pullbacks. 1, 2 pullbacks. I will not be surprised at all. That the monthly chart will not finish as an inverted hammer. Then, bam, drop down all the way low back to 0.8250, maybe even lower. I would also not be surprised if it keeps going straight for all the way down to the level I mentioned, 0.83 or 0.8250, maybe lower, and then the monthly chart will not be an inverted hammer, but it will be some harami or something like that. I tend to believe more for the second scenario I've been talking about. So what do I think actually is going to happen? There is a trend line on the 4-hour chart. If this trend line will break down, then I believe there is all the potential for the pair to drop to 0.8330, then 0.83, 0.8270 actually, then 0.8250, or maybe even 0.8220. But where I need your attention on this daily chart. This daily chart is about to create most likely bullish hidden divergence. Where exactly? Maybe here on the mentioned level, maybe lower on the mentioned level, around 0.8330, maybe even 0.8270. Each of these levels is a potential for a stop. There is a daily trend line here, the long trend line. Of course it could drop straight there, make a huge stop, and push it all the way up again. It could, pretty easy. And that's why I keep my bearish opinion as for now. I'll be watching this pair behavior, of course, but right now I think we need to be prepared for a buy. We need to be prepared for a buy. Right? It could happen on each of the levels I mentioned. Now, the main reason, as I said on the weekly chart, we have a bearish channel, right? But pay attention, this is 1, this is 2, this is 3, this is 4, this is 5, this is 6, and this is 7. On the 7, sometimes it makes a drop, maybe half of the way, maybe lower, and bam, pushing it higher. Let me say that this way, I will not be surprised at all if the euro pound will make a stop soon and will break above this channel. To what levels? Maybe it's going to be false break. I don't say it's going to duplicate itself. No, maybe it's going to be false break. But I will not be surprised if it will break again the channel and will lead us all the way to 0.90, for example. I will not be surprised. On a monthly chart, we need to pay attention as it is forming for us a bearish hidden divergence. This bearish hidden divergence, as I said, neither it will work and then we are going all the way down, neither it stops and push then for new highs. What I do suggest to pay attention, of course, as the minimum level accepted, this is this trend line. This trend line exactly. If this trend line will be broken down, well, then I think we're going all the way down for long term, maybe even all the way down to 0.77. I will not be surprised at all, as the euro is too strong, as I said, and this is going to change. Maybe it's at the beginning right now. So this is how I plan to play the euro pound. Of course, I keep my bearish opinions, but I'm already getting ready for a potential buy of the levels I have mentioned. New Zealandian dollar is my next pair. If you follow my blogs, I have been talking about this pair, and I said I believe that this pair is making its down move. Why do I think so? Weekly chart has bearish divergence. Monthly chart has bearish pressure. Daily chart has bearish divergence. The final thing has to happen is the breakdown of this channel. This will be the very conservative way. If it happens, open the doors as we are going all the way down. Now, how deep it could take us? Well, simply, I would not be surprised at all if we will aim 081 again, maybe lower. I would also not be surprised at all if we switch it to weekly chart, and if you pay attention, then on the weekly chart we have something like that, right? It means it could take us all the way down for very, very, very deep period. Will that happen? Well, I know it's right now it's very, very difficult to see that, right? But in my opinion, that's exactly what's going to happen. So a protection above the last high, even though it's not small stop, I think it's worth it because the potential is much, 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 much higher. So I am very bearish for the New Zealandian. For aggressive entry, you can go and make it, as I posted on the blog. For conservative, I would prefer to wait for a break of this channel, break down, smaller retest, and sell it with all the way down expectations. Pound New Zealandian is the next pair which provides very, very interesting opportunity. Pound New Zealandian created, first of all, kicker here. It started lower, then pushed higher, and then engulfing. Kicker and engulfing on the same time. It also created a false break below the last low. Now, the only thing still has to be created is the break inside of this channel. From my point of view, Pound New Zealandian has all the reasons to go up. Mainly because of the monthly chart. Monthly chart has monster divergence. I'm not convinced that this is the low. Maybe it's a double bottom on the monthly chart and we are going all the way up again. But maybe it's just a trick and it's going to push down for new lows, and in this case you need to be prepared because it might be long down move for 2,000-3,000 points to create a monthly monster divergence, then up for 30,000 points, for example. And that's exactly why, for this kind of pair, my suggestion, investor style. I do think it's time to start, but what is the best way to join? This is on a weekly chart. We see everything. On a daily chart, very, very, very bullish divergence. Everything looks good, right? No opposite signs, nothing there. So we go for 4-hour chart and we look for buy opportunities. Every push down. First of all, that's a bullish convergence. Every push down is a buy opportunity. Maybe we are in front of a head and shoulders, inverted head and shoulders. Shoulder, head, maybe shoulder again, and all the way up again. Now pay attention. In my point of view, 136 will be the first target, 196, sorry, will be the first target, and then I do believe it has all the reasons to go for 207, 208. The only problem with such pair is negative swap. If you have a swap-free account, it's perfect. This is exactly the opportunities for long run I love to take. Yes, it could drop down for 1, 2, or even 3,000 points more. So what? The potential of fair trades then is much bigger. It could be 10,000, 20,000, or even 30,000 points up. So that's the classical investor style trade I love to trade, and I'm going to be there for sure. Don't have doubts about it. So that's the New Zealandian pairs. Now in a few words just about the yen pairs. I believe that as I said, euro yen, dollar yen, everything begin to move. I think euro yen has all the reasons to push down. We got finally a first candle, first weekly candle. I do think it could play around, maybe even create new high before the drop down, but it's also very reasonable. We are going for something in between 121 to 118 as a first stop, and then we will be following. On a daily chart there is no opposite sign, no bullish divergence, nothing like that, so every push up should keep taking this pair lower. In between 121 to 118 I think there will be a stop, and then the pair will be looking for next direction, or to create new highs, or to push lower to 115, 112, and then all the way up again for new highs. Taking a look on a dollar yen on a weekly chart, this is the first time on extreme that there is a doji on a weekly chart. More than that, MACD ticks down on a doji. It's very, very, very rare, and that's exactly why I think we're going down. On a daily chart, for the first time after double doji and a Marubozu, it breaks down. For me, it's a very, very, very bearish sign. So every push up, and as sorry, as long as it holds below the 94.50, from my point of view, it has all the reasons to push lower. 91.30 would be the first level. 90 will be the second level. And of course, I do believe that for long run, it could go all the way to 86.60 or even 86.80 range. That's my beliefs. We go for the 4-hour chart. On the 4-hour chart, there is very interesting potential head and shoulders. We have a shoulder, we have a head, maybe it's going to be another shoulder. So put yourself a line here. Once it makes a break of the line, that's a very bearish sign, and you can go and sell it. Alternatively, sell the shoulder. If it makes a retrace higher and holds below this 93.30, 93.40, it could be very interesting shoulder, and then we go to take us all the way down and to the levels I have mentioned before. Pound yen, of course, I expected to follow that. As for now, it's a bit rangy for me, so I prefer to concentrate on the other pairs. For pound yen, break below 144 will open the doors for down move. As long as it holds it, maybe from here it will go for a new high, then much stronger drop. If it breaks below 144, that will be very interesting false breakdown, and this could open the doors for a really down move. Let's say, just in few words, I will not be surprised if first of all it will take the 150 before dropping all the way down. Talking of the pound, on the pound dollar also there is very, very interesting opportunity. Right now we have a bullish continuing divergence. It's pushing up. It could push to the 200 moving average. It could push even to 159, 51.60 maybe, and then I believe it's going to create a bearish hidden divergence on a daily chart, and right from there it could provide, right from here between this level to this level, bearish hidden divergence, and right from here all the way down again. And of course, remember this trend line, right? This one through all those levels, a break below this trend line, and this channel actually should open the doors for further long-term down move. So up, look for sells, and then all the way down. Going to indices. I've been talking about the indices for a long time, and I still think we are going down. The DAX, for the first time, created bearish convergence. Every push up from my point of view should provide a beautiful sell. Oh, this is on daily chart. We go for the 4-hour chart. I will be looking for sell opportunities there. Hidden divergence is forming already, which means get ready for a sell. Somewhere here, I expect the DAX to create a sell and go lower. How low? Well, I do think it's going all the way to 74.50, maybe 7400 again, maybe even lower. And I remind you, there is a trend line right here. A break below this trend line should open the doors for the index to go much lower. This is about a German DAX. Of course, the same scenario I hold about, same opinion I have about the Swiss market. But here, I think it's ready for another up move. Let it go. If it does, let it go. 7700, 7800 will be the next level to pay attention, because from there the drop could be much stronger. Alternatively, if it does not make the break up and breaks this range down, it also a very bearish sign, which will tell us we're going down. Down till where? Well, there is a bullish trend line that could take us that deep, yes, but I'm more in the opinion that we are going for the first line, like here, right? For the first trend line here. And this is my opinion about the Swiss index. Now a few words about the US indices. Well, every up move for the US indices is fake. That's how I feel. Especially for the Dow Jones and the S&P. There are divergences on weekly, there are divergences on daily. So from my point of view, every up move is fake. Could it create new high? For sure, yes. But I would not buy this up move because of the daily chart. There is clear weakness. And yes, as I mentioned in the previous week, that's exactly like it was on 2012. Remember this January? Up, and then boom, all the way down again. And that's exactly what I'm afraid is going to happen again. It could rise, volumeless rise, then boom, all the way down. There is a gap to close. Same, of course, for S&P. There are also more than 20 candles rise. There is also a gap. There is also weekly bearish pressure. Could it push higher? Of course. Of course. If it does, let it. Don't fight it, let it. Same about the Nasdaq, which still could provide a head and shoulders. Shoulder, head, shoulder. Still potentially. Still bearish pressure. So could it be real and take us higher? Of course. If it does, let it go. But these are the situations where I never will join. And that's exactly my opinion. And on the weekly chart and the monthly chart, sorry, of course, I've been talking about that long run. Every high here is fake because we have a monster bearish divergence forming on the monthly chart. Every high will be just stronger disaster, because after that, whenever it's ready, 2014, 15, or even 13, I don't know. This is monthly chart. Whenever it's ready, it's going to drop all the way down again. And that's exactly what I'm afraid of. So that's my opinions about the indices. Now you have my full scenario about my recommended trades on forex, and of course the indices. And about commodities, I don't have too much to say for now. Well, I don't find nothing interesting there. I've been talking about the oil, if you remember, but oil is playing around the same level, so I don't have actually nothing to renew. For our USA friends and Canadian friends, well, I hope that this Nemo storm attacking you right now will be over as soon as possible, as fast as possible, and that everything will stay safe, and you stay safe. We are always you. Stay strong, and let it over with its natural ways. Thank you very much, friends, for watching this video, and I wish you a wonderful week, and I'll see you in the next week, of course. Enjoy your time. Good trading.